Hi guys, welcome to Compare Return, where it's our job to connect expats with experts. Today's episode, we're going to bring you the one simple trick which could help improve the returns on your UK property investment by up to 60%. Now, I've been involved in UK property for a number of years now. I think it can make a really, really good investment. Bricks and mortar should form part of, any good investment portfolio, in my opinion. However, there have been some changes in the UK over the last couple of years in regards to how UK investment properties are handled with income tax. So this is a changing landscape, and changing landscapes sometimes mean you should change how you approach investments, which brings us to today's topic. So today we have a special guest called Chris Frame. He's been in the property game for a very, very long time now, and he's actually come up with a solution which is truly mind-blowing to bring a 2021 tech-based solution to an industry which is hundreds and hundreds of years old. It is really something special. So without further ado, let's get stuck into today's episode. Don't forget to like and subscribe to the channel if you enjoyed today's video. And once again, this video is not to be taken as financial or tax or legal advice. If you need help with any of those subjects, please reach out to an expert. Okay, guys, let's get started. Okay, thanks for joining us today, Chris. Really nice to have you along. Have you had a good day today so far?
Yeah, very good, very good. I have to say, Singapore. It's always being based in Singapore. It's always pretty consistent in terms of this time of day. Good weather. This time of year, which is nice. So yeah, a good day. Busy, which is good.
Yeah, lovely. Well, thanks for joining us. I guess first thing off the bat is tell us about what it is. What's a UK property company?
Yeah, so thanks, Ryan, and obviously thanks for hosting the session. So in terms of GetGround and who we are and what we do, we specialize in setting up and then running UK registered limited companies for the sole purpose of buying investment property in the UK. So very, very simply, our services benefit the investor. Anyone looking to invest in the UK, regardless really of where they're based, whether they're a UK resident or a non-UK resident, can potentially benefit quite significantly by using a limited company structure when investing in UK property. And essentially what we've done is create a very quick and easy to access solution, a comprehensive solution, and also one that's very cost effective. So I guess we haven't really necessarily changed fundamentally the benefits of a limited company structure necessarily, but we've made those benefits far more accessible to all investors by essentially removing two of the prohibitive factors that used to exist, which is namely one of cost. It used to be very, very expensive to set up a limited company. It also used to be very expensive to then run that limited company each and every year. And then the second point is really the time-consuming nature that used to be involved. Again, on setup, it could take weeks, if not months, to set up an operational business. And then again, each and every year, having to run that and undertake all of the financial administration was quite a time-consuming task. So those two elements really used to put a lot of investors off. The service or the solution we've created, it can all be done online. It can all be accessed remotely. From a customer's perspective, it takes about 20 to 30 minutes to complete the process, and thereafter we essentially do everything else on both the creation but then also on the running of that limited company and actually undertaking all of the financial administration on behalf of the investor.
I think one of the problems a lot of people used to run into traditionally was just finding the right person to be able to set it up. A lot of people who set up UK SPVs or property companies were, offices in the UK which had telephone numbers, and people in suits sat down at desks, and it was just really hard to get in touch with someone to do it all for you, really. But nowadays with GetGround and it all being online, it seems like you guys are the 2021 solution for this.
I hope so. I mean, I think one of the things that really appealed to me in terms of actually joining GetGround. I mean, my background is entirely property related, so I've seen a lot of the challenges around limited company structures over the last sort of 20 years or so, and in my mind, it just looked like a really good use of technology. I think in the last sort of however many years, there's been a little bit of not gimmicky technology, but almost technology that hasn't always improved a particular area within any marketplace. I do think the property market has always been significantly behind when it comes to technology, and I do think this is a very good use of technology to really help speed up a process that used to take a long period of time. And by then using technology, it can be done significantly at lower cost, because for our service, or our solution in particular, it actually just allows for a lot of automation, and that's really where we can help drive down the running costs, of the limited company each year.
Fantastic. So basically, you've digitalized and automated what was a very, very old business model.
Yeah, exactly. And like I said, I mean, I think the property industry has been a long way behind in technology. It's still got a long way to go as well, in my mind. But it's a start. And I think certainly we went live about 15 months ago in terms of, when I say went live, in terms of actually servicing customers. And the take up has been significant. We've got over 1,000 limited companies on the platform now. And I think that ease of service and the ease of solution has been very, very attractive. And I think also, particularly for those customers or investors based overseas, as much as the benefits actually to a limited company benefit both a UK resident and a non-UK resident, but particularly in the last 12 months with COVID and everything else that's gone on, the non-UK resident investor has really benefited from our services, because it's all been allowed to be created and set up and run properly, all done remotely, without the need for travel.
And you guys can deal with customers and clients from anywhere in the world?
Yeah, essentially, yeah. I mean, from our side of things, we have a very simple sort of AML, anti-money laundering process to go through, very similar to both developers and agents alike, really. We need a proof of ID, so most commonly a passport. We need a proof of address, which is any utility bill or formal letter dated within the last 3 months. And then also we take a selfie, or at least the customer would take a selfie in modern day technology. And that selfie essentially is then cross-checked with the ID that was uploaded onto the platform as a verification. So a really simple solution. So providing from an AML aspect can be provided. Really, our services benefit pretty much anyone who's buying in the UK.
So it's pretty much about the same process and about as easy as opening up something like a TransferWise account or any of your online digital bank apps nowadays.
Yeah, exactly that. I mean, it's very, very, very similar to that. I mean, TransferWise is a company that we very much admire actually ourselves, and sort of looking at the ease of something that they've done, and we follow quite a lot of their processes. And actually, we talk to them a lot, particularly. I'm sure we'll come on to this, but one of the parts of our setup services is actually the opening of a UK financial bank account for the limited company in question. So we open that. It can all be done sort of very, very quickly as well. But looking at sort of TransferWise and really talking to them a lot about that particular aspect was very, very helpful indeed.
And to have a UK limited company in your name at the end of this process is incredibly powerful. It's definitely something which didn't exist 5 years ago at all.
Yeah, it's exactly that. And I think it's certainly the limited company route. It's almost the way the industry is going a little bit. I think it's for a number of reasons. There's benefits to the investor, but there's actually benefits to the UK government. And the UK government are actually an investor into GetGround. So they fundamentally very much like what we do. But actually, there is a want in the UK to professionalise and regulate the buy-to-let industries far more than it's in the current scenario. There is a want to create greater levels of trust and transparency, and in their view, the use of a limited company structure helps with that. It's not the only thing they can change, but it's a step that they believe helps just provide that greater levels of trust, that greater levels of regulation in it. So yeah, a very powerful one, and I think becoming more and more commonly used. I mean, there was a research report done quite recently, actually in the last couple of weeks, by Hamptons, and in that article they produced, it sort of stated that over 41,000 limited companies were set up in 2020 simply for the purpose of buying investment property in the UK. That in itself was a 25% increase on the year before. So it is very much the way that investors are going, partly because of the benefits that a limited company offers, but also it's almost being actively encouraged as well right now to help improve the transparency of the industry.
Fantastic. I guess next question would be, why would you use one? So I guess tell us a bit more about that process, about what you do and what you will do for clients.
Yeah. So in terms of if I just start on the what we would do, so I mentioned earlier we have sort of two parts to our business. The first element is the setup process. So for that, we would open and create a brand new UK limited company. We register that company with Companies House, which is the UK governing regulatory body. We will structure that company as per the wishes of the shareholder or shareholders. We will produce and verify all of the legal documentation relating to that limited company structure, and also, and this is also important, that allows that company to undertake the activity in question, which is obviously the buying and selling of UK property. And we also open that UK bank account, which I've mentioned previously as well. So that all performs part of our setup services. And then once the company is set up and operational, we then take on all of the financial administration of that limited company. So we do all of the accounting, all of the tax filing, tax auditing, bookkeeping services, company tax returns. We undertake the role of the registered office address, and we also undertake the role of the company secretary. And the reason for that is just to make sure that we can then administer, but also document all of the running of the company properly, correctly, and according to the due diligence that's required. But just to be very clear, we have no ownership rights of the limited company. That would be owned in its entirety by the shareholder or shareholders in question. So that's sort of what we would then do for that particular customer. So we do the setup and the ongoing running of that limited company structure. The sort of the why you use it.
Yeah. Why would you use it? And so, why would you use one? And I guess because you can just go out and buy a house yourself. You don't need to have a company. And not only why, but also so who would be the main people that would benefit from this structure, and also who might not benefit, who's better off just not doing it at all.
Yeah, it's a great question. Obviously, one we get asked all the time. I mean, my view very simply is, I should first of all say our services are only applicable to the investor. So someone who's looking for buy-to-let investment property, GetGround can certainly help them. If anyone is looking to buy for their own use and to buy a family home, then realistically, GetGround is not for them. And from a personal perspective, I would question whether anyone should actually be using a limited company if they were buying for their own use.
Okay, so if you're going to live in the house, it's not for you.
That would be my personal opinion. There's a lot of additional costs that come from setting up with that structure, and more often than not really any significant benefits. So I do think if you were buying for your own use, I would just buy in your own name. But the principles really of why a limited company work, some of the benefits that work around property and using a corporate structure for investment property comes really from the same principles as to why limited companies were invented in the first place, which essentially was to help businesses run more efficiently. And if you have a buy-to-let or an investment property, at its most simple level, that is a very small business. And so the same principles as to why limited company structures were invented in the first place almost exist when using a limited company to buy investment property. And the fact that it is generating an income triggers a lot of benefits that can then happen. In terms of obviously the why using a limited company, I mean, the primary one that gets most amount of attention is greater tax efficiencies.
Yeah. So I think that's what a lot of people are going to be looking at, because if you're buying an investment property, the main goal is to have that return you an income, and the more income it can return you, the better. So I guess what's the tax savings, and not only what are the potential tax savings, where do those tax savings come from? Keeping in mind too that neither of us are tax agents, so this isn't to be seen as tax advice. It's literally just us giving examples from what is the potential saving by going down this route.
Yeah, absolutely. And I think so the financial benefits typically exist during the ownership period and the on exit. So that's really where the greater tax efficiencies exist. On entry, just to be very clear, things like stamp duty is an obvious payment that is required to be made on any transaction. On stamp duty, if you're buying in your own name or that of a limited company structure, stamp duty remains exactly the same. So there is no financial disadvantage or advantage to buying in your own name or a limited company.
Gotcha.
The benefits of a limited company really sort of start during the ownership period. And there are two key benefits that help create a slightly more positive cash flow. Number one is that using a limited company structure, you can still offset the mortgage interest against the income that property is being generated, or that property is generating. There was a recent change about 4 or 5 years ago where the UK government now, if you own an investment property in your own name, you cannot offset the mortgage interest against that income. So essentially your UK income tax liability is significantly higher, because obviously the mortgage tends to be the highest associated cost of that particular property and of that particular asset and that investment. So having the ability to offset that mortgage interest against the income immediately reduces the perceived profit of that particular limited company.
Okay, great. So say, for example, if you had $100,000 of interest payments a year on a mortgage and $100,000 of income from rent, so you got two buckets of $100,000. If it wasn't in a company, you would have to pay the interest on payments on the mortgage, and you would get taxed on the income from the rent. Whereas once it's put inside an SPV, the mortgage interest rates actually come off as an income deduction. Is that correct?
Correct, yeah. Just to be very clear, you can only deduct the mortgage interest. So if an investor did have a principal and interest mortgage, or sometimes what's called a capital repayment mortgage, you can't offset the capital. But the interest proportion, absolutely, using a limited company, you can still offset that against the income. And it's a real key benefit to investors. And again, just helps mitigate income tax liability. That's the reality of it. And then really from sort of leading on to that, the profits then that limited company then realizes and creates at the end of each month or each year, where a limited company sort of further then endorses that point of sort of running it very efficiently, is that it's then very easy to withdraw income from that limited company, and to do so very efficiently. Now, this will slightly depend on where a customer is actually based in terms of which mechanism they would use. But essentially, there are 3 options when it comes to withdrawing money from a limited company. Number one is by dividend income. If you are a non-UK resident, so regardless of your nationality, regardless of your residency status, but if you are a non-UK resident, there is 0% income tax in the UK on dividend income. So, most of our non-UK residents, if they're looking to extrapolate money out of that limited company, would do so by way of dividend. Okay, and very simply, no income tax liability. So that's a real positive.
Yeah.
If you're a UK resident, you have a £2,000 per year dividend income tax-free allowance. So you could withdraw up to the first 2,000 without incurring any tax. If you were wanting to take out any more than that, then actually you would be taxed in the usual manner as you would be as per your tax bracket in the UK.
Gotcha.
So there is another option that is available.
So simply, this is very good for the expats then?
Well, it is for the expats.
Non-residents.
The same benefit can be realised if you're a UK resident as well. And the reason for that is that you can also withdraw money from a limited company by way of an owner loan repayment. I should add, this is available for both a UK resident and a non-UK resident, but most non-UK residents would tend to go down the dividend route. And the way the owner loan repayment mechanism works is that if I buy a property for £200,000, just for argument's sake, and I put down a deposit of £100,000 and a mortgage for £100,000, that £100,000 that I have put down as a deposit or my own down payment, in the eyes of the UK government, is actually seen as a loan from me as an individual to the limited company.
To the company. Yep.
And then from the profits that limited company creates, I can then actually extract up to that amount. So in that scenario, £100,000, without incurring any income tax. And the reason that it's actually not viewed as an income, it's actually viewed as the repayment of a debt that I'm owed.
Okay, great. And I guess that leaves the big one, which is CGT, or on exit. What happens when it's time to sell the property?
Yeah, exactly. So they're the kind of the 2 primary benefits during the ownership period. And then on exit, using a limited company structure, you're enabling yourself to have lower exit costs is probably the easiest way to say it. If you own a property in your own personal name and that property goes up in value, you will be liable for capital gains tax. And again, this is now regardless of whether you're a UK resident or non-UK resident. In your own personal name, that capital gains tax is either 18% or 28%, subject to your entire UK income. So it's not actually necessarily linked to the gain of the asset, but actually to your whole UK income.
Yeah.
All right. 18% or 28%. If you buy a property using a limited company structure, there are actually two options that are available to you when you come to sell. Number one is the sale of the shares of the company. So instead of actually selling the property, you actually sell the company essentially. Now, obviously, you do end up selling the property because the company owns that property.
Yep.
But the sale of shares, number one, it creates a lower capital gains tax. So there is capital gains tax due on the sale of shares. That capital gains tax is now 10 or 20% if you sell the shares of the company. So
is that 10 or 20 on the same scale as the 18 or 28%?
Exactly. So in each scenario, there is an 8% saving on capital gains.
Yeah, fantastic.
So that's a real positive. There's actually a second advantage as well when you sell the shares of the limited company, and that is that the incoming buyer does not need to pay stamp duty if they are purchasing the shares of the company.
Okay.
And that's the real
property's not sold.
Well, there's a real significant uplift there for the seller, actually, because what we've commonly seen happen is it just allows for further negotiation. And there is the option there to actually increase your price slightly. And you create essentially a win-win scenario where you as the seller are selling the property for a higher amount than you perhaps would have done ordinarily. And equally, the incoming buyer is saving money because they're not paying stamp duty. So you create this sort of win-win situation. But importantly for the investor, it increases the returns and the profits of this investment, which is obviously a real benefit. So
great. So for example, if you had the house on the street, there's 3 houses and you're the one in the middle who's got the UK property company structure and your 2 neighbours don't, you've got the opportunity to either make 8% minimum more return on the property for the same price, or you can either discount the property and make your property seem more attractive for the sale.
Exactly. You benefit from the lower capital gains tax, absolutely. And if they were to buy the shares of the company, then there is the ability to further negotiate and increase your sale price. So that's a real positive.
Powerful selling tool.
Yeah, I think it's really powerful. And I think what we'll end up seeing really is that if the incoming buyer is an investor, then they will buy the shares of the company, essentially because they will still get the benefits that a limited company structure offer, and also they will save money on entry by not paying stamp duty. If someone was buying for their own use, that would likely create the other option that is available on exit, and that is very simply to sell the property out of the limited company structure itself. And in that scenario, there is actually 0% capital gains tax applicable, and you pay corporation tax, which is a flat rate 19%.
Yeah, so 19%. Yeah.
And then the rest of the funds would be distributed via the mechanisms we've just talked about, so dividend income, owner loan repayments, etc. So done very, very cost effectively indeed.
Okay, fantastic.
So that's really where I guess the financial benefits exist. We do actually have an audited tax example, which assumes a couple of sets of circumstances, although very fair ones. So it assumes a property price of £500,000. It assumes a 70% mortgage. It assumes that property will generate a rental income of £20,000 per annum. And it assumes that property is held for 5 years, during which the price goes up by 3% per year. And then there is a sale at the end of the 5-year period. And in that audited tax example we've got, depending on where you're based as a resident, so for non-UK residents, using a limited company structure can increase post-tax profits by sort of 52 to 66%. And if you're a UK resident, it would actually be from 23% to 66%. There is a slightly lower threshold, but still a significant increase in your returns on that investment.
Wow. So I guess the headline figure here is if you were, say, a non-resident or an expat with a property and you sold it and passed on to another investment, there's a potential for a 66% increase on your return on investment. Is that correct?
Well, it not necessarily a return on your investment, but a 66 higher or an increase on the returns that you would do when compared to owning it in your own personal name, essentially. So, and again, very happy to share the audited tax example with anyone who would like to see that, and indeed, obviously, further information. So,
so how much does all this cost you to do all this? It sounds like it's going to be, if it's saving you, potentially at a top tier, that much on a property, that's a massive saving on when you're talking sums of, up to £500,000 for a decent property. Surely it's got to be fairly expensive.
No. So one of the things we've done, I sort of mentioned at the very beginning, we've created this sort of solution that's very quick and easy to access, so it can be done online. Because of using technology, we've actually created a very cost-effective solution. So we have a very transparent fee structure. We have a one-time setup fee per limited company, which is £500 plus VAT. So that's £600 in total. And that covers all of the setup services that I mentioned. So the opening and the creation of the company, the registration of that company, the structuring of the company, all of the legal documentation, and of course, the opening of the UK bank account. And we will also, of course, work with any other party that's involved in the purchase itself. So solicitors, mortgage brokers, developers, agents alike. And then thereafter, we have an ongoing running cost, which is £20 per month. So you can run the limited company structure for £240 per year. And that covers all of the financial administration that we've sort of touched upon again. So all of the accountancy, tax filing, auditing, bookkeeping services, the company tax returns, of course, us undertaking the role of the company secretary, and also us acting as the registered office address as well.
Wow. So it's increased protection for the investor. It's increased returns, or increased the amount of profit you could generate over a long period of time. It's all done online, easy and automated, and it's cost effective as well. And also it gives you a big benefit to your next door neighbours when it comes time to sell the property.
Yeah, absolutely. And it's exactly that. And obviously we've touched a lot on the financial benefits that a limited company structure offer. And you just sort of touched on another one of the benefits of a limited company, which is always a lot harder to monetize, but they do reduce an individual's personal liability. They do offer greater protection. They're very good mechanisms if you're buying with multiple persons. They're very good for inheritance or estate planning purposes, etc. So there's a lot of other benefits to a limited company that are perhaps a lot harder to sort of put a monetary value on.
Yeah.
But equally, a lot of customers themselves have put a lot of value on those benefits as well. And I think the reduced liability and greater protection, particularly in kind of the last 12 months, that has been a really positive or very one of the benefits that a lot of value has been associated to by the investor.
Fantastic. What's GetGround's credentials? Are you guys recognised? Is this is this all obviously above board? And is it what's the structure? How do you guys operate in the space for UK property?
Yeah, absolutely. It's another question we get we get asked quite regulated. So we're a UK company. Just to be very clear, we're founded by two Singaporean brothers who live in the UK. Our head office is in the UK. We've then got subsidiary offices, one in Singapore and one in Hong Kong. As a business, we are FCA regulated, so that's the Financial Conduct Authority.
Yep.
And the reason for that is, particularly on exit, actually, in terms of transfer and sale of shares, we have to be regulated in order to execute any potential transfers later down the line. So we're FCA regulated. We are also regulated by the Information Commissioner's Office. So that is something we're sort of very proud of. We have been endorsed by the NRLA, who are the largest, it's the National Residential Landlord Association, and it's the largest landlord association in the UK. So that was a really positive endorsement. And then probably one of the biggest things for us in terms of sort of the credentials and the credibility of who we are is that one of our investors is actually the UK government.
Yeah, that's a massive one.
They have very much, firstly, bought into what we do as a business, but equally, they are very positive towards what we actually do. And the reason for that is there is a real eagerness in the UK to try and regulate, to professionalize the buy-to-let industry, just to create a lot more trust and transparency in that industry. It's an industry that often hasn't been overly regulated in the past, so there's a want to improve that. And there's a belief that limited company structures are a part of that process. So that's a real positive. And obviously, to get their investment, there was an awful lot of due diligence and compliance and everything else that
I can imagine. The big G word, government, is always an important one. I guess the other thing too, if sometimes when people talk about these tax savings, the question of legitimacy always comes into that conversation. And if this is something that it seems like the government is actively encouraging people to do, then hey, you can't get more of a green line than that.
Yeah, it's an interesting one, and again, it's something that we get asked quite a lot. Is why essentially is the UK government encouraging people to go down this route when actually tax liabilities are lower? And actually, the reason for it is that if someone does set up in a limited company structure, then it's regulated, as we said, and registered with Companies House. So that tax is then essentially guaranteed to be received as and when it materializes. Whereas in your own personal name, there are a lot of landlords who are trying to avoid paying tax, essentially. So whilst it might be higher, they're probably not getting 100% of the tax that they are owed. Now, that is being clamped down a lot on, particularly in the last sort of 3 or 4 years, and will continue to do so. But essentially, by going down this route, it guarantees their own income, albeit a slightly reduced rate, So again, it's a sort of not necessarily a win-win, but
you've hit on one of the mantras of compare return, which is it's always better to eat the carrot than to get the stick. So if pay some tax, always pay tax, always. But if you're transparent about your operations and you're paying the correct amount of tax, if that correct amount of tax is also lower, then you're winning all over the place.
Exactly, and I think, and it's something we talk a lot about as well. Tax avoidance is illegal.
Absolutely.
But mitigating tax and doing things efficiently and effectively is obviously not. Managing those taxes is not. So it's very important.
Well, fantastic. It sounds like you guys have, all the boxes ticked. You've come up with a modern 2021 take on a traditional industry. You can open up bank accounts, companies, everything digitally. I've helped people go through this process myself, and it takes about half an hour at maximum. Take a selfie on your phone. It's got a QR code you can scan. It's a really fantastic digital software solution you guys have put together for a traditional industry, and the financial benefits for spending that half an hour to get it set up massive. So thank you very much for your time, Chris. We're going to leave links and comments down below in the video here to get in touch with your services and get started if anyone needs to speak with you. And yeah, mate, thank you very much for your time today.
Absolute pleasure, Ryan. Thank you so much for hosting.
Too easy. Compare return. Our job is to connect expats with experts. And Chris, you definitely seem like you're the expert in the space.
That's very kind.
Thanks, mate. Cheers. Have a good day.
Thanks, Ryan. Thank you. You too.
Okay, everyone, that was the video for today. I hope you enjoyed the interview with Chris and found it interesting. What would previously have taken you potentially weeks or months to set up and thousands of pounds can now be done online in under an hour, which is absolutely amazing what technology can do lately. And if that's not a game changer, then I don't know what is. If you enjoyed today's video, once again, make sure you hit that like and subscribe button, and we'll see you next week for the next episode. Thanks.